Hey everybody, welcome to a new episode of Blockchain Central. Time flies, right? 2018 is coming to an end, and so it's time to look back at the key events of this very bizarre year. Let's be honest, it wasn't a very good year for blockchain, but there is a silver lining. What is it? Watch this video to find out. When talking about 2018, one might argue that the crypto landscape has changed more last year than it has in a decade of existence. One thing that hasn't changed, though, was the constant barrage of criticism and predictions that blockchain is finally done for. In 2018, more than ever, the critics were somewhat justified in their opinions. But I prefer to look at it as a slightly painful but mostly awkward adolescence of the crypto industry. Those growing pains had to happen, and now we're set for maturation. 2018 has seen dwindling profit margins for individual miners as the price of Bitcoin and other cryptocurrencies continue to drop. Add to that the prices of electricity, GPUs, and the competition from institutional miners, which remained relatively high, and you'll see trouble. Multiple mining operations that were not economically viable had to close down, and in November, the total hash rate had dropped to its lowest point since August. Depending on where your operation is located, it is estimated that the mining cost of a single Bitcoin can currently range from $6,000 to $7,000. With the price of Bitcoin now around $3,700 USD, it is clear that many miners will operate at a loss, while the bigger players can weather the storm hoping for a bull market in the 2019 year. The average miner will struggle to be profitable. For that reason, GPU manufacturers saw a significant drop in sales, which led to several business executives calling the mining market dead. The CEO of AMD, Jensen Huang, went on record saying that at this time, we consider crypto to be immaterial for the second half of the fiscal year. Of course, things might improve with the developments of ASIC mining hardware and sustainable power solutions, but it is unlikely that we will ever again see the amount of mining hype that was present throughout 2017. But let's look on the bright side. Maybe you'll be able to upgrade that graphic card on your PC without going bankrupt. I think it is safe to say that the unregulated financial spaces will always create issues. There will always be bad actors looking to exploit the system. That is why both IPOs and private equity became so overregulated. In fact, now they are so complicated that it became increasingly difficult for retail investors to participate in the market. The ICO was heralded as the democratization of the investment space. Now everyone could participate and get rich by supporting this new and emerging technology. But, as is usual the case, this led to few bad actors exploiting the space by means of ICO exit scams. As a result, these few scandals and scams gave the entire ICO industry a bad rep. This included the Shenzhen Punyan Blockchain Group, a T-based blockchain project defrauding over $48 million or Pincoin, which pulled off a $660 million scam. Let me know in the comments if you'd like to see a separate video detailing the worst ICO scams of 2018. As a result, first Facebook, then Google banned advertising of ICOs and tokens in Q1 of 2018. Outside of these extreme cases, the market in general has seen investors turning away from ICOs quoting low crypto prices and the fact that only a handful of those startups managed to bring sustainable value to the table. It is said that sometime next year, many ICO companies will run out of capital accumulated in 2017, and if they fail to come up with a sustainable business model, they will be off the market by the end of next year. As a result, many crypto skeptics were quick to point out that blockchain startups, despite having accumulated over $30 billion in ICO money, have failed to deliver a meaningful user base. One victim of the diminishing interest in ICOs was Ethereum, the primary platform for many ICOs. According to the analysts, its rapid price decrease was caused by lower usage rate due to fewer ICOs being handled. Additionally, the fact that many projects are selling off their Ether to maintain liquidity contributed to the increased supply and lower prices. When in November 2018, the SEC went hard after two ICO companies, AirFox and Paragon Coin, this sent a message to the entire sector that the wild, wild west of token sales is over. To put it bluntly, 2018 saw all attempts at having Bitcoin-based exchange-traded funds approved by the SEC fail. The chairman of the SEC, Jay Clayton, has been very specific that a Bitcoin ETF is unlikely to happen until there are measures in place to ensure that it is free of manipulation. If you're not sure what ETF stands for, we have an entire video about that. But in short, it is a security that tracks a given index, commodity, or even an entire industry. ETFs, unlike mutual funds, can be traded on a stock exchange like any other common stock. Of course, having an ETF for Bitcoin would be a watershed moment for the entire industry, as it would allow individual investors to participate in the market with a relatively low barrier to entry. Most people are very skeptical that the SEC is going to approve Bitcoin ETFs anytime soon. Probably not even in 2019. 2018 saw a major personnel reshuffling of the crypto industry. First of all, multiple crypto companies had to significantly reduce the number of their employees. Some of them due to the overall decrease in prices of cryptocurrencies, some of them simply to conserve their ICO budgets. A good example of that could be the social network and token Steemit, which laid off 70% of their staff. Bitmain, a crypto mining company, also closed off an entire R&D office in Israel. Even Consensus, a company led by Joseph Lubin, a key contributor to Ethereum, had to cut staff. We have also seen few key figures stepping down from the top of the organization chart. Some examples of this include the CEO of Ripple, Chris Larsen, and Tezos president, Johan Gervers. The 6,000 USD Bitcoin support line was heralded by many as the unbreakable barrier that will hold up no matter what. Well, it's late December 2018 and we're hovering around 3,700 USD. So that prediction clearly didn't pan out. The 6,000 USD was touted both as a technical and psychological support line. It represented a 70% decline of Bitcoin's high of $20,000 US in December 2017, and taking into consideration that all 9 previous Bitcoin corrections never exceeded 64%, many people thought that the price will never fall below 6,000 USD. In addition, it was thought that even if it did, a massive drive to buy would increase demand, almost immediately driving the price back up. Well, that did not work out, proving yet again how unpredictable the crypto market can be. Okay, I just gave you a bunch of bad news. Sorry about that. Is it all bad though? I really don't think so. We can look at 2018 as a cleanup year and a solid reality check. With the ICO bubble bursting and more regulations and attention coming to the blockchain from the SEC, we'll hopefully see a more secure and mature market that will support sustainable, profitable businesses, adding real value to the consumers. In addition, many people think that the recovery of crypto prices will be slow and steady without the drama of drastic price hikes and drops. This can mean that the ever-present volatility argument used by blockchain critics will not be so relevant in the future. It is my hope that the awkward adolescence is over. Crypto went to jail on a misdemeanor charge, learned its lesson, and it's all going to be good from now on. Of course, it's not going to be that optimistic, but my outlook for 2019 is still positive. We'll post our 2019 predictions in a couple of days, so please subscribe to make sure you don't miss out. Before you go, please note that this content does neither represent financial, legal, or tax advice, nor is it supposed to be understood or interpreted as solicitation to buy or sell any securities, coins, or tokens. Thank you for watching, and if you like this video, make sure to hit the like button, and don't forget to subscribe to Blockchain Central to never miss a beat. Happy investing.